Welcome back to the channel. We are kicking things off with massive disruption in the tech world. Wells Fargo just lifted the price target on ARM Holdings, ARM sending shockwaves through the market. Insider Monkey is suggesting that despite the excitement, the Q4 2026 outlook for ARM appears tough, and we are diving deep into what this means for the semiconductor giant and its future.
Tired of dropping your phone or struggling to hold it with one hand? The PopSocket's Pop Grip gives you a secure grip, works as a phone stand, and even lets you swap the top for a fresh new look. Simple, useful, and perfect for everyday phone use. Click the link in the comments to grab yours on Amazon.
Next up, we look at the explosive reaction following ARM Holdings' Q4 earnings release. Revenue hit $1.49 billion, and data center royalties more than doubled year-over-year, fueling massive AI infrastructure momentum with hyperscalers like Oz and Microsoft adopting custom ARM CPUs. But despite the positive numbers, shares tumbled over 6% as investors wrestled with those incredibly high valuations. We are also tracking the intense analyst debate surrounding ARM's valuation and near-term execution. The Goldman Sachs Group recently boosted its price target for ARM from $125 to $150, but this comes amid concerns about supply constraints and management's cautious outlook on capitalizing on the surging AI demand. We examine what this means for the company's path forward. Finally, we analyze why ARM is sliding as investors question the near-term monetization of AI demand. Bank of America analysts point out that while the agentic CPU growth story is real, it might already be priced in, and management is holding steady on their outlook despite a massive demand spike. Don't miss out on this crucial analysis. Subscribe now and get the full breakdown. Wall Street investors are keenly focused on a potentially transformative artificial intelligence revolution, with analysts pointing toward a single, under-owned company holding the key to a projected $250 trillion market by 2040. This massive potential stems from breakthroughs in AI that are rapidly reshaping global operations, as evidenced by predictions from figures like Elon Musk regarding the proliferation of humanoid robots and the integration of generative AI across industries. While major tech giants like NVIDIA, Alphabet, and Microsoft capture significant attention, insiders suggest the true opportunity lies with a smaller firm developing critical, super-cheap AI technology that underpins this entire ecosystem. This technology is viewed as essential for redefining how humanity learns and creates. Experts from firms such as PwC and McKinsey also estimate that AI is poised to unlock multi-trillion-dollar potential, reinforcing the gravity of the situation. The narrative suggests that while the scale is immense, the underlying breakthrough is what separates market leaders from future dominators. The report emphasizes that positioning oneself within this AI wave is crucial for wealthy investors across Silicon Valley and Wall Street. The content urges readers to investigate this specific, less-known company, claiming its technology warrants immediate attention from rivals. The article promotes access to an in-depth, members-only report detailing the company's technology and growth potential, offered through a subscription service at a low monthly rate, highlighting exclusive research and portfolio insights. The piece stresses urgency, warning that the window for capitalizing on this investment opportunity may be closing quickly. ARM Holdings experienced a volatile reaction following the release of its fourth-quarter earnings, with strong revenue figures clashing with concerns over valuation. The company reported Q4 revenue of $1.49 billion, surpassing analyst estimates, and demonstrated significant growth in data center royalties, which more than doubled year-over-year. Despite these positive indicators, the stock saw a decline of over 6% in after-hours trading as investors scrutinized the high valuation, which currently sits at 47 times sales. The market reaction was heavily influenced by ARM's strategic positioning within the burgeoning artificial intelligence infrastructure. Discussions centered on the increasing adoption of custom ARM-based CPUs by major hyperscalers, including AWS and Microsoft, for optimizing agentic AI workloads. management's forward guidance, suggesting another doubling in data center royalties, bolstered optimism regarding ARM's long-term trajectory beyond its traditional smartphone market dominance. However, skepticism persisted. Critics pointed to the slowing growth in core royalties and the exceptionally high valuation multiples, questioning the sustainability of current performance amidst smartphone seasonality. Traders are actively debating whether the recent price pullback represents a strategic buying opportunity or a signal of caution within the overheated semiconductor sector. Insider and institutional activity provides further context. Over the last 6 months, ARM Holdings insiders have executed 13 sales transactions and 0 purchases. Institutional investors showed mixed sentiment, with 377 firms adding shares to their portfolios and 311 decreasing positions in the most recent quarter. From an analyst perspective, the sentiment remains cautiously optimistic, with one firm issuing a buy rating and no sell ratings recently. Multiple analysts have issued price targets, with a median target hovering around $190. ARM, a global semiconductor intellectual property company specializing in energy-efficient processor architectures, has seen its stock price targets adjusted by various investment analysts, reflecting a mixed outlook. The Goldman Sachs Group recently raised its price target from $125 to $150, maintaining a sell rating, which implies a potential downside of 28.9% from the previous close. Other research firms have issued varying opinions. TD Cowen has reissued a buy rating, while Royal Bank of Canada reaffirmed an outperform rating and set a price objective of $260, up from $175. Mizuho increased its price target to $255 with an outperform rating, and Guggenheim upgraded its target to $255 with a buy rating. Notably, HSBC upgraded ARM from a reduce rating to a buy rating, setting a price target of $205. Across 19 research analysts, the consensus rating leans towards a moderate buy, with 6 holding a hold rating and 1 issuing a sell rating. The average price target derived from this analyst data stands at $190.67. In recent trading, ARM shares traded down $26.32 on Thursday, closing at $210.98 on a volume of 17,064,397 shares. The company maintains a substantial market capitalization of $222.9 billion, with a P/E ratio of 282.63. Its 50-day moving average is $152.53, and its 200-day moving average is $138.08, with the stock trading between a 12-month low of $100.02 and a high of $239.50. Regarding recent financial performance, ARM reported earnings on April 1st, with an EPS of 60 cents and revenue of $1.49 billion for the quarter, achieving a net margin of 17.15% and a return on equity of 14.01%. Sell-side analysts collectively predict the company will post 85 cents earnings per share for the current year. In insider activity, CFO Jason Child sold 21,280 shares on March 25th, and CEO Renee A. Hawes sold 23,867 shares on the same day. Over the last 90 days, insiders have sold 83,712 shares, totaling $13,614,730. Institutional interest remains active, with several entities, including DekaBank Deutsche Girozentral, Spartan Wealth Advisory Services LLC, Ascent Wealth Partners LLC, AssetMark Inc., and SteelPeak Wealth LLC, acquiring new stakes in the company during the first quarter. Approximately 7.53% of the stock is currently held by institutional investors and hedge funds. ARM operates by licensing its ARM instruction, set architectures, and core processor designs to chip makers for integration into custom system-on-chip products, featuring product lines like Cortex and Neoverse CPU cores, Mali GPU IP, and Ethos neural processing units. The market context suggests that while analyst sentiment is divided, the company remains a key player in the semiconductor landscape. ARM Holdings plc stock dropped over 11% on Thursday as investors expressed concern over the near-term monetization of its burgeoning artificial intelligence demand, despite strong underlying growth indicators. Bank of America analysts suggest that while the growth story for agentic CPUs is valid, the potential upside may already be priced into the stock. Data center revenue surged by over 100% year-over-year, with ARM now claiming a 50% market share across cloud servers, and demand for its AGI CPU has roughly doubled in the last 6 weeks, reaching around $2 billion. However, the stock fell because management maintained its near-term royalty and chip outlook unchanged, citing significant supply constraints across wafers, substrates, memory, and packaging, which limits ARM's ability to fully capitalize on the demand spike. A second major concern is ARM's market share target. Management reiterated its ambitious goal of capturing 15% of the AGI CPU market by fiscal 2031, a figure analysts deem aggressive. BofA models a more conservative 5% to 7% share, highlighting intensifying competition from both x86 and custom ARM-based chip designs, alongside existing multi-sourcing agreements held by key customers like Meta and OpenAI, which restricts ARM's pricing power. While BofA slightly raised its fiscal 2026-27 estimates on the CPU content outlook and increased its price target to $245 from $180, it maintained a neutral rating, emphasizing the need for more concrete evidence of AGI CPU traction before becoming more positive. At approximately 69 times calendar year 2028 earnings, the stock appears to be heavily pricing in a successful transformation into a mixed IP and chip company, leaving little room for the execution risks analysts still perceive as substantial.